Here's another cheat sheet that you simply can't forget. We're currently in the boring zone, and we always tend to be in the boring zone after the halving. And this boring zone can last for multiple months after the halving, but then it precedes the banana zone, and the banana zone always sees parabolic price action towards the upside and new all-time highs and beyond. So it's all about surviving the boring zone and preparing and using this boring zone to your advantage to prepare for the parabolic phase in the cycle. So subscribe to the channel for more videos like this in the future. Like this content if you enjoy content like this going forward, and let's talk about these Bitcoin cycles in more detail. Because after the halving, we tend to see sideways price action. People call this the boring zone, but this is just reaccumulation, and it tends to see price move sideways for the most part, going towards the upside, going towards the downside a little bit, but generally reaccumulating. And this is exactly why we should be reaccumulating, because the reaccumulation phase is precisely for that, positioning yourself in this reaccumulation phase for upside before we go into that parabolic phase of the cycle. And historically, we tend to see generally sideways price action for around 154 to around 160 days. You know, what's interesting about this cycle right now is that we're approaching that 160-day mark very, very shortly. It's 160 days after the halving in only a few days, and already we are reclaiming the range low of this reaccumulation range. And we've seen so many downside deviations in this reaccumulation phase. So many times, maximum fear, maximum pessimism, maximum doubt and uncertainty, people panic selling, capitulating their positions before we finally embark on that parabolic phase in the cycle. And we've seen many vicious downside deviations in this cycle already. Here, for example, throughout 2023, many different downside wicking opportunities to shake people out of their positions, but of course, none like this, where we saw actual candle-bodied downside deviations for many months and on many occasions. But Bitcoin is looking ready to reclaim 60,600 as new support to finally expand across this range, finally challenge for 70k, to challenge for a chance of breaking out into the new parabolic phase of the cycle. This breakout tends to occur 160 days after the halving, and we're approximately 157, 58 days after the halving. So if we see a repeat of 2020 history, we should be breaking out in late September. And if we do go into late or early October, then that's fine as well, because the longer we consolidate, the more we are prepared for a breakout into the parabolic phase of the cycle. And just note how we tend to hang about these old all-time highs for an extended period of time. Maybe not as long as we have been in this cycle, because in 2021 it only took a few weeks before we finally expanded to new all-time highs and beyond. In 2017, this was a slightly more prolonged and extended range, more zigzagging for sure, but this was a longer range compared to what we saw in 2013 or 2021. In 2017, it took more than a few weeks before we rallied for 252 days before peaking. In fact, in 2013, we rallied for 273 days before Bitcoin peaked. And in 2021, we rallied for 329 days. So this is what we're looking at going forward. Once we finally break the old all-time high region of 70k, roughly speaking, we'll break out into a parabolic phase of the cycle, which is going to last from 250 to 330 days, roughly speaking. And at the moment, we're still reaccumulating. It's been the longest reaccumulation time in history around these regions. But this is exactly where price compression and reaccumulation is going to precede volatility and price expansion towards the upside. Of course, we have to keep in mind that there is a diminishing return in terms of upside that we should expect going forward for Bitcoin. However, nonetheless, it is something to get excited about, because that still means we can rally beyond 100k in the coming months. So really important to always focus on the mirror principle. when it comes to the halving event. Approximately 500 days before the halving, we get a bear market bottom, and approximately 500 days after the halving, we tend to see a bull market top. And this is the case in every cycle. 500 days after the halving, we see a bull market top, as you can see here, and 500 days before the halving, we see a bear market bottom, as you can see right over here. Same thing in the previous cycle of 2016, mirror principle. 500 days after the halving, we see a bull market peak take place, and 500 days before the halving, we tend to see a bear market bottom take place here as well. So let's look at that in this cycle, because 500 days before the halving, we got that bear market bottom in November 2022, and now 500 days roughly after the halving, and we should see a new bull market top take place in September, October of this year, which means we only have 1 year left in this cycle. So we still have 1 year left of parabolic price action towards the upside in this cycle. Really important to focus that this is, of course, not logarithmic. So I'm not saying we're going to experience such an expansive move towards the upside in this cycle as well, because that would essentially mean we'd go to, these figures are pretty crazy here. So really important to understand that we're not going to see this sort of upside right here. However, we're probably going to see a lot of upside going forward. This is a logarithmic chart, so it takes into account a different scale than this chart. So to an extent, this is a misleading chart. This isn't my chart. I've seen this in the internet on crypto Twitter, but it does just showcase to us that we can experience even just a little bit of upside, which is this is so much more realistic than something like this, which we just copy paste here and we go into millions and millions and millions. I think that this is so much more realistic, but it still means that we can get into some really deep, impressive figures in the $100,000 plus range. So really interesting time going ahead, because if we focus on these sort of resistances, they always get broken in the future. These sort of major resistances always get broken. We always see price rally to new all-time highs and beyond into a parabolic phase of the cycle, and we're on the cusp of that same exact phase right now, and we have a whole year still left ahead for us to enjoy it. So if you're thinking about getting shaken out at around this momentous time in the market, really think again. Be poised to hold on to your positions. Even adding at these positions is technically buying at the top, as because we've been here for such a long time. But we're still going to rally, not that much, but probably somewhere like this much, still gets us to 160k or so, probably lower than that, but still an impressive amount of movement towards the upside awaits. So it's really important to be reaccumulating at these regions, because upside is on the cusp of occurring, and now is the worst time to be selling your positions. So patience, hold for the next months, hold for the next several months, because we still have a whole year left in this bull market, and this is exactly the chart that you need to keep in mind. 500 days after the halving is how much we can expect this bull market to go on at most. And looking to this chart, we're only 150 days after the halving, with 160 days being that key breakout moment from the post-halving reaccumulation phase into the post-halving parabolic upside phase. So 160 days after the halving, we are currently in that moment, and we still have 500 days, roughly speaking. So we're not too far along. We have a whole year left of upside price action going forward, but just look at how this price action develops. It's not just sunshine and rainbows. We tend to see some dipping price action on the way to new all-time highs, so get ready for that. We're going to see lots of pulling back in corrective periods, even sharp corrective periods. Here, for example, but really important not to get shaken out in the next year, because the next year is supposed to get us to that new all-time high before finally peaking in the bull market. We have a lot of time left to enjoy this cycle, so let's enjoy it and let's be prepared for it. And that preparation starts off by holding and not selling before hand. Really important to hold into new all-time highs and beyond, because that's what comes next. So if you enjoy this content, sign up to the free newsletter in the description down below. It's free and you can get these insights 3 times a week directly delivered to your inbox, and subscribe to the channel for more videos like this in the future. Like this content if you'd like to see more videos like this going forward. Thanks so much for watching. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.